Hello, everybody. This is Joshua Hayes. We're coming to you with February 13th stock market wrap-up for you to use this long weekend for President's Day and Valentine's Day on the 14th and 16th. So we will not be back till Tuesday, but who knows? Maybe I'll throw together a video just to throw one together for you guys. I don't know. To be honest with you, though, not much is still changing, though. Long term from 2008, still in a downtrend. Intermediate term from July, June, still in a downtrend. Intermediate term from just a random day in October to now, as you can see, pretty much just flat. Like from 1027 to now, the Dow Jones has only moved down -4%. Still a little bit down, but just not going much anywhere really. And for about the past, 2 weeks to a week, it's not much moving either, as the market is barely down around 1%, along the way. So not much is going on there. But as you can see today, market fell 1%. It was kind of a tight inside range day still of the big down day that we had on the 10th, but still not much is going on. The past 3 days overall, it just moved about -0.50% for the Dow Jones Industrial Average. Let's look at the New York Stock Exchange. You can see lower volume. Once again, the past 3 days, only -0.15% the move has been. So despite today's losses, it came after 2 days of gains. So really short term, New York Stock Exchange going nowhere. Sub-intermediate term going back to October, going nowhere. Intermediate term going back June, July, down. Long term from 2008, down. Now let's look at the NASDAQ. NASDAQ, as you can see, just going sideways for 3 days, up 0.63%. It's a little bit better than the other indexes. However, still overall, if I just pick this random day here in January, down 0.78% since January 13th. Going to just run over here to this day in February 3rd, 1.19% gain. So the market is still just biding time right here. It's been too extended from the 200-day moving average to short safely since around October, November. And even though we have made money on our shorts, we still have had a few that we've had to cut our loss on. So that just shows you it isn't a perfect environment. Mostly whenever we go short, they're going to work in a good downtrend, and you're not going to have as many cut loss. The past 4 days, oddly enough, not only have we had no longs the past 4 days, but we only had 3 shorts the past 4 days. This is about one of the more drier spells I can remember besides what we had around, October to December. I mean, it was pretty dry then, but very dry right now. And that's funny that we just have 3 shorts in 4 days and 1 doesn't work. So 2 are working, 1 didn't work. I'm going to see how that one looks now. Now it's working again, but has a tail on it. Still, I decided to go and just show you folks. The one that we just recently went short that we had to cut our loss on was PVCT. Of course, we then had to cut our loss, and whenever we did that the next day, you can clearly see that the total was, you only lost about 1 to 2%. So nobody got hurt, and that's the good important part. And we made money on the other 2 so far. So that's the other good news. But that's about it, really. We're just going nowhere right now, biding time, walking sideways. It can either have us build bases, break out, go higher, or get that 200-day moving average closer to a lot of these stocks that are too far extended, like, for instance, EQIX. Go to Zoom 2, and you can see that in a downtrend, had the death cross in September. If it can bounce to the 200-day moving average, you'd be safe. But right here, it wouldn't be safe because just going back to the old February highs, that's a 15%, 30% loss there, and that would get you close to the 200-day moving average. However, if we can get to the 200-day moving average and look just like it did today, closing with that ugly price action with the negative BOP getting worse in red with the higher volume, it would have been a short. Why? Because if you go to Zoom 2 on Telechart, press 9, you can see this one can go from $51 to a possible low in 2003 of $2. Guys, that's over 90%. You got to take that short whenever you get it. But right now, it's just too risky. Can't risk it. So, just can't do it. Let's look. Let's see how much time I got. Should have plenty of time, I would hope. Unless I'm really... Okay, good. Plenty of time. Now, I want to show you the Chinese stock market while our market is going nowhere. The Chinese stock market, since about October 27th, is clearly up. And it's up around 35%. since the time that our markets are basically flat. So from October 27th to February 13th, China's up 34%. During that same time, the NASDAQ has moved from October 27th to February 13th. It has moved 1.89%, while the Chinese stock market, the Shanghai SE Composite, this is just one form of it, there's also a Shanghai index, is up 34%. Also, remember how we showed you the past week, 2 weeks, the market's been flat, up 1, down 1%? China's up 16% during that time. So it's obvious who the new leader is. And it's sad that Telechart doesn't give us individual stocks for us to trade if we can get onto the Chinese stock market, because I'm sure some great ones, just like there could be some great ones available to us from the over-the-counter bulletin board market that could have been given to us whenever it broke out on huge volume. As you can see, look what the volume in BOP does. Boom, boom, boom on the breakout. Huge breakout. Zoom 4, beautiful. Zoom 5, even better. Just shows you how powerful it was. And this is what it did right after it. And this is how all of our longs are supposed to act. You notice how it doesn't go below the 50-day moving average? And whenever it does, do you notice how it has tails and bounces before it even hits the 200? Look at that. Just amazing. But yet, however, we missed all of it thanks to Telechart not giving us over-the-counter bulletin board stocks with the Amex New York Stock Exchange and NASDAQ. I know what they're thinking, and it is true by one of our best longs right now, as it looked like whenever it gave us our huge buy signal. This was the first one here. It is now up, 64%, and from its highs and lows, it was almost 100%, as you can see from here to the highs about here. We'll just use that short time period, 94%. These are the kind of moves we used to seeing right here from, June to the September top. We used to always see that. Sorry, I'm hitting my laptop, which is why I didn't go all the way. And now we just don't get to see this anymore because we're still in a bear market. But when these charts start showing up again like this, boom, 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 you can then ride it back up to those old highs. So that's what that looks like anyway. So showing you that the longs can work still, obviously, duh. We just need a bull market, and we don't have that. The only one that we have is in China, and we can't get access to it. Now, besides China, we do have a bull market somewhere else. It's not in oil, which was up 10% today, so I just wanted to show you guys that. It's in the hard metals, platinum. Even though it was down 1% today, what does it have once again? Let's plus this all the way out. A bullish tail. A very bullish tail showing that the negative day wasn't that negative. Got some support. Silver, a very bullish day again. Let's actually decrease this to show you how pretty it is. Going back out, you can just see how bullish silver is. And so it had another good day today. And how did gold do? Gold had a negative 1.14, but let's go out with the plus sign. And what do you see in there again? Another bullish tail, showing that it can't close at the low of the day. That intraday, as it goes to whatever the market makers deem low, somebody's buying it. So somebody is definitely accumulating gold, because this is a weekly from the October, November, December lows. Somebody's definitely accumulating silver, because here's the silver chart from those lows. And somebody's pretty much accumulating platinum. Now, at the same time, the United States dollar still is in a good position, and that is great news, as it's still in an uptrend overall. However, the relative strength line to the S&P of the dollar compared to gold shows you that gold is much stronger. So gold is the currency that you would probably prefer to be in right now. You got your golden cross also on the 12th. That was your signal to, or actually you got it on the 11th, so your signal was to load up the next morning. And if you did that, you're basically flat, but you're going to probably pay. It's going to probably pay off. So, see how much time we have left? Oh, cool. Plenty of time. Still a minute left. Just to let you know, gold, I believe, is a buy now on any pullback to the 50-day moving average. Soon, silver will be a buy on any pullback to the 50-day moving average once it gets above the 200-day moving average. Long term, I think these metals are going to go much higher. Gold mining stocks, I'm going to see what that is, actually. Alt in 135, show you what that looks like. And that looks still good. So the gold miners look good. So I just want everybody to remember, use your charts, not opinions. Market's kind of flat. China's bullish. The metals are bullish. The dollar's still bullish. I'll be back with part 2 and part 3 for my subscribers so we can get into detail into this. For now, aloha. Have a great weekend. Happy Valentine's Day and happy President's Day.